We're in Denver, Colorado at EnerCom's 19th annual Oil and Gas Conference. I'd like to welcome Craig Rasmuson, the Chief Operating Officer of Synergy Resources. Hi, Craig.
Good morning.
What has been Synergy's approach to the Colorado initiatives and political pressure on oil and gas operations in Weld County?
You know, we have, as well as all the other operators in the basin and across Colorado, have been very proactive in working to educate and continue to educate the public and any concerned citizens on how safe our industry is. It's highly, highly regulated. Some of the toughest rules in the country are here in Colorado. And we're very proud of the strides our industry's made over the past few years. Technology has really allowed us to be a much safer operator, controlling emissions and just overall safety as far as the quality of production equipment we can put on a location. So we need to continue as an industry to educate and stay ahead of any questions or concerns, work hard to be as diligent and as vigilant as we can be to make sure that we don't have any situations. Health and safety are the utmost concern with this industry, and I really credit the strides our industry's made, and I really credit all the operators in Greater Colorado and the DJ Basin for stepping up and putting a great education program together.
In June, you told Oil and Gas 360 that Synergy was in the middle of the learning curve in regards to well development. Talk about what you've learned the past 2 months. How have things progressed since then?
You know, we are getting more and more data. I think it's probably another 6 to 12 months before we truly have our hands around the differences in plug and perf versus slide and sleeve completions, the type of proppant or the amount of proppant we put in there, whether it's a hybrid or a slick water completion. I really believe, and we've delineated this with our acreage by drilling our northernmost acreage to our southeasternmost acreage to our westernmost acreage, and now we're drilling right in the heart of our acreage, which is really the core of the Wattenberg, and also a little bit of the more western flanks. So I do believe the rock varies. All of our engineers and geologists, the people that are a lot smarter than I am, have supported that and educated us on that too. So I think your completion techniques and our abilities to delineate exactly what our recipe, if you will, going forward will probably vary from area to area also. The great thing is again, we have drilled all variances of areas, and we have a great sense for where we're going. I think there's going to probably be some minor adjustments, minor tweaks, if you will, going forward. Nothing drastic. We're not trying to reinvent the wheel. We're making very, very, very good wells, some of the most competitive wells in the basin. But we always want to try to fine-tune and make sure we're ahead of any changes and or new technologies, new ideas that are out there. And we'll continue to evaluate, but I really think we'll have our hands around it better probably into calendar quarter of 2015. We'll have a better handle on truly how to develop going forward.
Craig, how are you dealing with capacity constraints in the region? You
know, it's an ongoing battle. I do, again, credit DCP and Anadarko Midstream, our two gatherers, for putting a lot of capital in this basin, but the velocity that all the operators are drilling at and the velocity of the great production we're making in this basin is really hard to keep up with. They put hundreds and hundreds and hundreds of millions of dollars in, and there's more plans going forward through 2016, and I think as we get into 15, we'll hear about the plans into 17 and 18. But it's simply an everyday battle. I do believe our wells are curtailed to a certain level. I can't quantify that level. But it is a decimal mover, if you will. It does keep us from, if we're not moving our gases, our oil doesn't come to surface, being that our gas is our transporter here. So, we're the oil and gas is still there. We're just getting maybe at a little slower pace than we'd like. But it's not hurting us per se. We have great cash flow, and we have great partners in the DCPs and Anadarko. So we'll continue to add compression and do vapor recovery type things that we can go ahead and capture all those gases, and it's just a little slower rate when we're battling these extreme line pressures that we are experiencing.
What will your future rig program look like? You've gone from 1 to 3 in just a year, and your company's production replacement is well above the industry median.
You know, we've had a great growth, and we've done that growth with little or no debt and leverage. It will stay true to our cloth, if you will. We're not going to go do some big money deal that's going to go allow us to go to a 5th or 7th rig or anything like that. We'll grow at the pace we can grow off of cash flow, and it's allowed us to go to that 3rd rig. We do have some models that show us adding rigs in the future. Where that window of time is, obviously we're at the mercy of commodity prices. We're at the mercy of the rate that we can produce. We just talked about constraints. But I do see us adding rigs in the future. We'd like to add a rig out in that northeast extension where we've got that greenhorn play, if you will. So we're looking at that into 2015. It's definitely in our CapEx for 2015, and we've put all of our science and plans behind that. So we'll grow at the pace we can. You know, we've got other targets and other capital expenses as far as acquisitions and those type of things coming forward also that we always keep our nose out there too. And if one of those comes up, that might slow the drilling as far as rigs, but we are committed to 3 rigs for through 14 now and on into 2015.
What will be the main driver of growth for Synergy?
Yeah, drill bit always. These horizontal wells that we're creating and doing a great job with our great team that we've assembled at Synergy and our great management that leads us. We have shown and displayed that we can go ahead and grow through the drill bit. We are, again, constantly looking at acquisition opportunities. You know, unless it's an acquisition that has a lot of BOEs, it's not necessarily going to move our growth as far as you know, monthly or quarterly revenues, but it's something that it would be an acreage. If it's bolt-on to acreage that we already have, especially in the heart of the Wattenberg, we're going to be very aggressive players within that. And there's a few targets out there, nothing to speak in any detail of, or we haven't put any acquisition dollars into our CapEx simply because there is nothing teed up, if you will. But we are tracking it every day. It's part of our business model, and we'll figure through if and when the time's right how to finance a deal. And we're certainly at capacity. We could do a bigger deal than we've ever done in the hundreds and hundreds of millions of dollars, and we'll hopefully come across something that we can go ahead and get that done with and help our growth.
Well, Craig, we certainly appreciate your insight and your time today.
Thank you. Appreciate you.
I'm Quinn Nguyen for oilandgas360.com.